The major banks drop borrowing capacity. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. I've got my stein of coffee and I thought we'd have a look at this article from mortgagebusiness.com.au discussing, well, changes that the major banks are doing to borrowing capacity. I think this really tells us, we're getting all these mixed messages. The media is saying, buy now, FOMO in, use the first homeowner grant, use home builder, get your, discount on stamp duty, buy a house without a deposit. Seeing all these things. But don't stack up on toilet paper, stack up on houses. But the banks here are making it harder, more difficult lending environment. So a big four bank has announced that it will tighten its serviceability criteria for mortgage applicants by lowering its debt-to-income threshold. ANZ has announced changes to its debt-to-income policy for home loan applicants, effective for applicants submitted from the 3rd of August. At present, ANZ does not accept home loan applicants with debt-to-income greater than 9. However, the major bank has informed brokers that as of the 3rd of August, mortgage applicants with a total value greater than 7 times the borrower's annual gross verified income may be deemed unacceptable for ANZ mortgage purposes and will be subject to stricter credit criteria. So, if you're with a total value greater than 7 times your annual gross verified income, you're no longer acceptable. ANZ is the latest lender to revise the DTI policy, with Teachers Mutual Bank Limited reducing its threshold earlier this month from a maximum of 8 to a maximum of 7. So you can only borrow 7 times your yearly income, or your gross yearly income. These changes have come amid growing credit quality concerns linked to the economic fallout from the pandemic restrictions. S&P Global Ratings is forecasting an 85 basis point increase in credit losses across the Australian banking sector's loan portfolio in the 2020 financial year. The 85 basis point increase, which is expected to moderate to 50 basis points in 2021, amounts to approximately $29 billion in gross loans, nearly 6 times higher than the record low in financial year 2019. According to the Australian Banking Association, the pandemic-induced uncertainty has pushed approximately 800,000 borrowers into loan deferral arrangements, over 61% of which are mortgage holders. Just think about that. And we've been seeing example after example in stories and articles where people are dependent on these mortgage holidays. Some of them to keep their homes. Some of them, who you'd hope are educated and experienced enough to have enough money set aside for a rainy day. But it's just not part of our culture anymore. It's not part of our culture anymore to prepare. It's just the sad thing. I'm hoping this will be a never again moment for a lot of people, that they'll wake up and turn around and say, nope, we're getting control of our finances. We're going to cut back on our costs. Or just not going to work, working from home, going, oh, honey, why is there all this extra money? Oh, because I haven't been buying coffees every day. I haven't been, doing this. I haven't been doing that. I've been saving. Here's a challenge for you. This is one I recommended in a previous video. Just go a week without buying coffees and take that $5 and every day transfer it off your mortgage or off your credit card, and then see at the end of the week how you've made a dent. It's only a little one, but it adds up. You do that for a week and then another week and another week. And it happens. It's these habits. You want to get the psychological benefit of succeeding. Because I think a lot of people feel like it's in a hopeless situation. They can't dig themselves out of it. Investment management firm Morgan Stanley estimates that approximately 20% of such borrowers would default on their debt, triggering a $4.3 billion rise in credit losses across the 4 banks alone. The big 4. 4.3 billion. Yet their shares are still powering up, everyone. The ABA recently announced that banks would extend repayment holidays for up to 4 months for distressed borrowers unable to service their loan upon the expiry of their initial deferral periods, most of which expire in September. And we've seen already that other banks are extending that on to March. And I suspect some people will get a little tap on the shoulder going, mate, you got to sell. This is your last chance. Sell now. How many people are going to find out then they're in negative equity? That's the scary thing. Some of these loans people are taking on, they're big. And they're going to have to realize what they consider a luxuries may have to disappear. And that's just the journey some people need to go through. Tough times put life in perspective, and you can emerge from them stronger. The biggest risk is that people feel overwhelmed and aren't able to deal with it. Now, that's where friendships and relationships with people in your immediate group are important. So particularly if you're watching these videos, you've been preparing, or you've got friends that maybe, haven't prepared, it's the time to reach out and just chat with them. Let them know it's okay. Or if you've gone through tough times, if you've been down a hole of financial trouble and dug yourself out, then you can be the voice of reason to other people who may be struggling with this. Because remember, guys, this is the first recession in nearly 30 years. There's going to be a lot of people that are going to be blindsided by it. It's going to be a real hard hit to some of them who've got their entire identity wrapped up in, being a property genius when they may have just gotten lucky. And there's much, material things come and go. There's more important things than that. However, Morgan Stanley analyst Richard Wells has warned that loan deferral extensions could require a reassessment of pandemic overlays. Mr. Willis? Yes. Acknowledged that repayment holidays could mitigate risks to the economy by avoiding unnecessary hardship and foreclosures, but noted they would also extend the credit loss cycle, which he said would now be more likely to peak in the second half of 2021 financial year to half of 2021. The analyst added that the extensions would drive higher probability of default and higher expected loss in the internal models of Australia's banks, even when default is avoided. Constraints on borrowing capacity and growing credit quality concerns have eroded demand for new housing finance over the past few months. According to the ABS, latest lending indicators data, the value of home loan approvals plunged 11.6% seasonally adjusted to $16.4 billion in May, the largest fall in the history of the series. And we looked at that a few days ago where people were refinancing. So we're hearing these things. First home buyers flood back to the market. Jump back in. It hasn't made that much of an impact. Investors are pulling back. People are refinancing. So they're preparing. People are assuming it's going to be tough times. Unemployment is sitting over 7%, everyone. It's sitting over 7%. We've got challenging times ahead. This is the ABS data. There's worse figures out there. So it's good to see people are, hopefully taking advantage to refinance, to get cheaper deals, and to prepare for tough times. So it follows a 4.8% decline in April, which was the sharpest fall since May in 2015. The sharpest fall since May in 2015. So the takeaways from this, everyone, is that, the debt-to-income policy for home loans for ANZ used to be greater than 9. Or they won't accept them greater than 9. Now they're dropping it. The Teachers Mutual Bank Limited has gone from 8 down to 7. So that's going to limit also people's ability to refinance. So maybe people have taken advantage of the opportunities to get in and refinance now before these restrictions came in place, before they even reach another level. We'll have to see. As always, thank you all for watching. Let me know your thoughts and opinions on this. Are you rushing out to get a loan more than 9 times your yearly income? Quick, get that first home. No deposit down. No repayments for 10 months. Really does seem like a clown world we're living in. As always, thanks for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions down below. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy our merch from HeiseSays. You can use Gold Pass from the Perth Mint, or support us via PayPal. Thanks, everyone, and I'll see you in the next episode. Bye for now.